Hey guys, welcome back. In today's video, we are talking about the new AMC record, Adam Aron's hint, the path to squeeze, and many more in this video. First, we're taking a look at this. AMC Entertainment shatters weekend revenue record, sets the highest weekend revenue mark in the company's 106-year history. So this may look familiar to you because we've seen this tweet recently already, but no, this is a new tweet. After what has happened during this weekend with the recent release of The Odyssey and the Spider-Man, this is how well AMC is doing. More than 10.2 million moviegoers attended AMC theaters in the United States and Odeon cinemas internationally from Wednesdays through Sunday. We've generated the highest total revenue ever for a single weekend, including new records for admissions revenue and new records for food and beverage revenue. So this is something that we've already said before, where it wouldn't surprise us that we are going to be seeing more of these breaking the record sort of news, because firstly, we've already seen the lineup of movies for the rest of this year, and there are just insanely good movies coming out, insanely anticipated movies that are coming out, and so we are expecting the box office to get bigger. But in return, AMC is of course benefiting from this, and just like what we're seeing right now, just like how well we're doing, this is exactly what you are seeing. And just like how well we saw Q2 earnings have done for AMC and what it meant to the stock price, you can expect AMC's Q3 earnings to be even bigger, and this is obviously going to play a big part in the future of AMC. And so for the people who are saying that movies are dead, why would you ever be long AMC? Well, firstly, just like we see with how well Spider-Man is doing, 355 million for the second biggest opening weekend ever. Now, what's interesting about this is the fact that this is the second biggest opening weekend ever, yet we were still able to break records. Now, this is what we talked about with how, firstly, the lineups of movies have been extremely good. Secondly, we talked about the efficiency of AMC. We talked about the market share of AMC. So we don't need to set records like before, where we don't need this to be the biggest opening, yet we're able to still produce results like this. Now, you can obviously then imagine if when we do get movies that are going to be doing even better than what we are seeing right now. And so when we talk about the future of AMC, when we talk about the potential of AMC, it's only going to get even bigger. Now, furthermore, is that if you're not watching Spider-Man The Brand New Day or The Odyssey in the movie theater, you might be among the people on Earth who are missing these global phenomenons. Now, this is something that Adam Aron has already tweeted before, but it goes on to talk about, firstly, what he's doing in terms of the marketing for AMC. But also, just like we talked about, he obviously cares about AMC, he cares about the business structure. Now, firstly, this is just a quick mention, is that if you obviously haven't watched these movies, make sure you go watch it. And again, feel free to support AMC by going to an AMC theater to watch these movies. Now, some of the information that you need to look at, like we know, AMC did a best ever record. And when you take a look at the box office weekend, 429 million, we're seeing how well we're improving. We're seeing how well we're doing. And for the shorts who are still trying to say that bankruptcy is inevitable, for the shorts who are saying there is no future for AMC, again, there is nothing I can say to them at this point, because AMC has done nothing but prove these guys wrong for the past few years now, especially for the past few quarters and especially the past few weeks. And so for the shorts who are still trying to kind of find their point to talk bad about AMC, like I said, there is nothing I can say to you anymore, because if you don't believe in AMC, despite everything that we're seeing right now, I don't know what will. But for us, for the apes, the one who actually understands common sense, the one who's willing to look at the truth, to look at the data, you're seeing how well AMC is performing, you're seeing how well we're doing, and you're going to be looking at how AMC is going to do even better in the future. Now, some of kind of even better statistics that we need to be looking at is that don't just obviously let the numbers kind of throw you off, because at the end of the day, we are seeing how well the box office is booming. But what's even more important to know is that are people going to AMC? Now, when you're going to get record attendance, when you're going to get record revenue, you expect that people are going to AMC. But what we're also seeing is that kind of the in-depth analysis, which is that even when you do go to the theaters, if you're worried about inflated numbers, if you're worried about, potential incorrect data, People who are going to theaters, people who are going to AMCs especially, they are seeing how it's combined with almost full showings. And this is what we talked about with how people are choosing AMC right now. The things that AMC has been planning to do for the last few years with the AMC Go plan, in terms of investing in premium screens, in terms of trying to cut down on unprofitable theaters, these are all working and we are getting the market share that we deserve. And so when you take a look at the current market price, AMC today, we're up 2.3%, despite the fact we were met with some selling. We're currently sitting at 2.89. The thing about this is that the market is still pricing bankruptcy, or at the very least, the market is not accounting for the future cash flow of AMC, for the future potential of AMC, at least not to the extent that we are expecting. And so what we have to understand is that AMC still has a long way to go. Even when we don't talk about everything else that we've talked about with the squeeze, with the potential buybacks, with the dividends that we talked about, when you just look at where AMC should be as of right now, without any future factors, it should still be way higher. And one of the things that you're looking at here is that AMC is 3x of EBITDA, where the center market is 6x. And that already talked to you about kind of the undervaluation on AMC, but it really highlights where the future potential and just how much potential we're looking at for AMC. And one of the things for this is that, couldn't have said this any better myself. If any other company continuously broke records like this, that stock would be in another solar system orbit by now. But because it's AMC, which is owned by retail, it dropped from a high of 3.069 back down to 277. Now, this is a very accurate explanation of today. So today we opened at 296, went to the high of 303. And again, this is off the back of a record revenue once again, but yet we saw the price actually go all the way down to 276. Now, market at least has some common sense. Market are buying them back. What they are afraid of is obviously AMC closing above $3, especially at the start of this week. One of the things we talked about has been, of course, the $3 options that is for AMC. And we're talking about the gamma exposure that it can have. So for the short sellers, in terms of why they're trying to bring AMC down, is obviously clear as day. But the very fact that they are doing this, it really just highlights how much manipulation there is on the market. And something else that I want to quickly mention as well, it's with this. So this is a very old tweet. This is back in 2021. And this was for the opening of Spider-Man again. So this was for the Spider-Man film back in 2021. And Adam Aaron talked about this in terms of, firstly, he talked about how well it was done. This was him kind of hinting towards what the future of the entire industry was going to do for AMC. Now, it's extremely coincidental that the fact that we are seeing another record revenue and it happens to be another Spider-Man movie, but he's obviously talking about how things like this are exactly the things that are breaking the short sellers. And he talked about choke on that. And I do think that right now, as we're seeing AMC deliver news like this, as we're seeing AMC growing like this, I do think it's another time we have to understand of how well we're doing. And when you take a look at the discrepancy right now, when you take a look at kind of what's going on with the hedge funds, firstly is that ideas prevalent among hedge funds back in 2020 make them bet heavily on AMC's demise. But what we are looking right now is that the 2026, the global box office recovery has just been insane. So what we are seeing right now is that, of course, we know the reason why the hedge funds were betting on the demise of AMC was because they looked at the market, especially because of COVID, they thought that theaters was going to go. And kind of the indications they gave was, of course, what the market revenue was like. But we've seen how wrong they are. We've seen how well AMC is doing. And I think it's extremely important to understand that at times like this right now, we are exactly proving that these guys are wrong. What they have been trying to kind of prevent AMC from doing, what they're trying to prevent the price of AMC to doing has, of course, been failing. And that's why we're looking at AMC kind of really move the way that it's moving. And so when we talk about, are these short sellers still stuck? And we talk about this particular tweet Adam Aaron made back in 2021. You start to see why these shorts are starting to become scared. And one of the things that we have to notice is that right now we are watching history. Adam Aaron and the AMC team are in the process of engineering the greatest business miracle turnaround and profit-making story in financial history. And I do think that this is very true because we're looking at a company that was once at zero revenue, that was once on the brink of bankruptcy, to really have this major comeback where not only only are we going to be seeing dividends, not only are we going to be seeing buybacks, the debt's fully paid off, but we're also going to be looking at how this would lead up to the share price of a company to 100x, to 1000x, and even more. And I think that's what we are witnessing right now. If every step has been done correctly, if Adam Aron is making the right moves, not only what he has done already, but in the future, of course, if he's still making the right moves, we really are going to be looking at one of the biggest things in history for AMC. And on the other hand, is that for these streaming services that were pushing the idea that theaters were obsolete, what we are looking at is how they are obviously wrong. As we see how well AMC is doing, as we see that people are willing to go into AMC. And I think that this should be something of the past right now, because I think Netflix by now have realized how they were clearly wrong on this. One of the biggest reasons for why Netflix is trying to collaborate with AMC is because they've realized that people still are going to theaters. People still want kind of that premium of a theater. And so that's why they want to release films that are firstly exclusive to theaters, then it goes on streams in the hope that people are kind of still going to be holding on to streaming. Again, this kind of just goes on to say that Adam Aron has been on the right path. We have been on the right path. And there is really nothing for me to be worrying about. None of us have been worried about in terms of that streaming was going to take over theaters. But I think it's a whole new different thing, the fact that streaming now need theaters. And I think that's a very piece of good news going into the future. In terms of something to look at for AMC, is that some of the levels that people are obviously looking at right now for AMC, we're at a very crucial point for AMC right now, because on these levels that we are currently at, there are so much volume involved. There have been so many places, positions where short sellers have stacked their positions. And so when we do see AMC break above these levels, we're going to be seeing short sellers to also get hurt by that as well. One of the levels is $5. Now, when we talk about $5, we're not talking about how difficult it is to break the $5 marks, but it's talking about once we break the $5 mark, what it means for AMC. And that's why we've been looking at kind of this pressure right now at the $3 area, because we talked about previously, and this has been a very long time. For the ones who remember, previously, there were a lot of short positions being taken at the $3 area. And so now, as we see AMC kind of close towards this area, as we see the options going in the money, as we see the gamma exposure increasing for AMC, we're going to be looking at AMC break the $3 area. And if we do, we are going to be seeing that volume picking up. We can easily see AMC go to $5. And that's where the shorts are worried the most. Because when AMC goes to $5, not only are the shorts who took their short positions at $3 losing a lot of money, but it would also mean that AMC is then going to have another stage of acceleration, another stage of upward volume, where it's then going to further increase the price. And that obviously increases the losses even more for the short sellers. And that's what they're trying to avoid. And so when we talk about why is there so much pressure right now, why is there so much resistance at the $3 area, it isn't because AMC should not be above that. It isn't because AMC is overvalued, but rather it's because the shorts are extremely worried about what's going to happen when we do break this level. And if anything, it's talking about how undervalued that AMC is. Now, another thing that I do want to talk about, especially right now, and this isn't anything negative, but with AMC doing extremely well right now, one of the things that we're obviously looking out for is with the share count. And this is something that I'm curious to know because of what it means for AMC. It's not something that for me, it's urgent to know, at least right now. If we are able to get this in the next earnings update, that would of course be extremely good. But the reason why I talk about this is that right now, with the amount of AMC shareholders that exist in AMC, with the amount of shares that have been created, with the amount of synthetics, more importantly, that have been created, we're obviously looking at a massive situation. But the reason why this is important is because recently we're seeing news of, especially UBS, whether they're buying AMC and then covering AMC to get rid of their position. They are all very important to knowing what's actually going on behind the scenes. And this is an old post as well, but this is back in 2023, but this is talking about how UBS reports 785 million loss due to the cost of Credit Suisse integration. And for those of you who obviously don't know, or for those of you who do know, is that UBS inherited Credit Suisse. And we talked about how that means that they inherited the toxic AMC and GME swaps. Now, with this, we have to understand is that these positions have only been growing in terms of their toxicity. And you can already see how much it affected UBS already back then. So when we talk about what's going on with AMC right now, when we talk about the synthetics with AMC right now, you can only wonder how much is it costing them now. If it was already costing them close to $1 billion back at the very start, imagine how many billions of dollars they have cost them now. And that's why, with understanding the amount of shares there are out there, with understanding the synthetics that have been created, especially in the recent years, we have a better understanding of where AMC is going to go. Now, as always, this is financial advice, and I'll catch you guys next time.